Imagine waking up one day, checking your bank account, and realizing you've turned your hard-earned money into a wealth-building machine. Sounds like a dream, right? Well, it doesn't have to be. Today, we're diving into the top 5 investment strategies for beginners that can set you on the path to financial freedom. Stay tuned because you won't want to miss these insights that could change your life forever. But first, let's talk about why investing is essential. Fear is a powerful motivator. Many young people fear missing out on financial opportunities or being left behind in a world that seems to move faster every day. But let me ask you, what's scarier? Investing and potentially failing, or not investing at all and watching others prosper? The truth is, the earlier you start investing, the better your chances of building significant wealth. Point 1. Start with index funds. First up, we have index funds. These funds track a market index like the S&P 500, giving you a slice of the market without the hassle of picking individual stocks. Think of it as buying a whole pizza instead of just one slice. You get a taste of everything. Now, here's the kicker. Historically, index funds have outperformed most actively managed funds. So, why gamble with your money? Invest in index funds to ride the market's growth with less risk. And hey, if your bank account is looking more like a college student's ramen noodle budget, index funds could be your best friend. Point 2. Dollar cost averaging. Now that you know about index funds, let's talk about another powerful strategy: dollar cost averaging. Dollar cost averaging is like setting a date with your future self, consistently investing a fixed amount at regular intervals, regardless of market conditions. This method helps you avoid the emotional roller coaster of trying to time the market, which, let's be honest, is as predictable as your friends showing up on time. By investing consistently, you buy more shares when prices are low and fewer when they're high, ultimately averaging out your costs. It's a smart, low-stress way to invest. Remember, slow and steady wins the race, unless you're racing a tortoise. But you get the idea. Point 3. Diversification. So, we've covered index funds and dollar cost averaging. Now, let's get into the nitty-gritty of diversification. Diversification is the practice of spreading your investments across different assets to reduce risk. Think of it like not putting all your eggs in one basket, unless you enjoy omelets. By diversifying, you protect yourself from market volatility. Imagine this. If one sector crashes, your other investments can help cushion the blow. It's like having a safety net while walking a financial tightrope. Cliffhanger. But how do you decide where to diversify? Don't worry, I'll share a secret weapon shortly. Point 4. ETFs. Now that you know about diversification, let's discuss exchange-traded funds, or ETFs. ETFs are like index funds' cooler, more flexible cousin. They trade on stock exchanges just like individual stocks, but represent a collection of assets. This means you can invest in various sectors without breaking the bank. And here's where it gets exciting. Many ETFs have low expense ratios, making them a cost-effective way to diversify your portfolio. Plus, with the rise of fractional shares, you can even invest in high-value stocks without needing to sell a kidney. Cliffhanger. But remember, not all ETFs are created equal. Stick around to learn what to look for. Point 5. Continuous education. And finally, the most crucial strategy of all: continuous education. In the ever-changing world of finance, staying informed is vital. This means reading books, following market trends, and even subscribing to channels like this one. The more you learn, the more empowered you become to make wise investment decisions. Think of yourself as the hero of your financial story, equipping yourself with knowledge like a knight preparing for battle. And who knows, the next big investment trend could be just a video away. So, don't stop here, keep exploring. So, to recap, the top 5 investment strategies for beginners are: start with index funds, practice dollar cost averaging, diversify your portfolio, consider ETFs, and commit to continuous education. Each of these strategies empowers you to take charge of your financial future. Remember, the journey of 1,000 miles begins with a single step. So, take that step today. If you found this video valuable, don't forget to hit that subscribe button and check out my next video on the secrets of successful investors. Together, let's craft your path to financial freedom. Stay motivated, stay invested, and I'll see you in the next one.